Yes. Hi. Welcome. This is new segment of our Bwpt research, and we are going to interview the investor relations of a lot of company. But for today, it's Eagle High Plantations investor relations, and it's going to be about the performance of the company since they just announced their first half result in 2019. Obviously, a lot of investors will be interested to see where there is going to be lights at the end of the tunnel. It's a very long tunnel. I experienced it myself.
Yeah. Probably not as much as I did, but yeah.
Right. So,
what would you like to know?
obviously, I wouldn't ask whether I'll make money, but eventually that will be the questions. But obviously, there are steps that I want to see how Eagle High Plantation can reach the share price can reach certain higher level through improved productions, through in some parts are controllable. The cost obviously controllable.
Okay. Well, I think we can put it all into one thing, because I mean there's a lot of things there about. I mean, ultimately, how will the shares do? Of course, the shares are basing on the profit performance. The profit has been lost for quite a long time. We've been presenting about this in the last couple of months because yes, we're kind of at our biggest losses at the moment in the first half. I think the first half of this year was the biggest 6 months loss that we've had. But what we've been presenting is that you can start to see the potential now for this to reverse quite quickly, maybe surprisingly quickly. And one of the main reasons for that is because the loss has mostly been caused by the accounting. So in the last 4 years, we've seen a big increase in the mature area of the plantation, which is good. So that's from all the investing that we did before in the 2010, 11, 12, 13. That's all come to maturity. And when it comes to maturity, you expense what was previously capitalized. So that includes the operating costs of those hectares plantation. That includes the interest, which was previously capitalized, and it also includes rising depreciation from the original investment cost. So if you look at the last, since 2015, which is when we became Eagle High Plantations, the mature area's gone up by about 50%, and the operating cost has increased as a result. And the depreciation has gone up by about 70%, and the interest cost in the P&L, the expensing, has doubled. So if you looked from the cash flow point of view, what's been happening with production and price? Yes, the price has been a bit weak. Yes, production has not grown until last year, but the revenue side, the operating side, has been sort of flat to increasing. What's made the loss is all those costs coming into the P&L from the investment cash flow into the operating cash flow P&L. So that process is now finished. So if you look at the first half of this year, we're already expensing the costs. The depreciation has already gone up. It's probably not going to increase that much more. The interest is the easiest one to see, because if you can see what is the interest in the cash flow statement and what is the interest in the P&L, the income statement. And before, of course, they were very different. But now they are, as of the first half of this year, they are the same. So there's no more expensing of interest to happen. And that means that from now onwards, the impact on the profit will only come from the sales. The cost will be kind of stable. The cost per unit can go down if the production is going up. But in general, the biggest cost is going to be quite stable. So the sales will determine the profit. And up until, well, in this year, we've had prices still quite low. We've had production coming back down from the higher levels last year. So we haven't had a period yet where we've had production and prices going up. Last year we had higher production, but we had lower prices. And then we still had the accounting change. But if you look at what's happening now, in the third quarter, we have both production and price rising. And we haven't had this for a long time. So we've now not got any impact from the accounting. That's already finished. We're focusing on the sales, and the sales is, I mean, we haven't reported it yet because this is just starting from July, but the sales is now rising. So for example, and then after the holiday in June, the production in July was about 25%, no more than that, 30+% higher. So we went from 90,000 tons to 125,000 tons. If you look at the run rate, so of course it was slower in the beginning after the holiday of July, and then higher by the end of the month. So we're starting off August on a higher base. So you would expect that this month the production will be incrementally higher again. So if you look at the first week, we're looking at maybe more than 140,000 tons, hopefully, possibly 150,000 tons of fruit this month. And the price in the market, everything financially has been very weak the last 30 days. Stock markets have fallen, oil's been weak, but the palm oil price has been going up. It's gone up about 7%. So we've had this quite nice turnaround in the palm oil price. And what we've been pointing out to investors is that you can now just take a very simple calculation of what would be profitable. And it turns out, using the costs as they are, with the interest, depreciation, and the cash costs, it's around about 155,000 tons of fruit, and then 7.5 million rupiah per ton of oil for the price. So as I said, in August, we may be reaching 150,000 tons of fruit. And the price now is around 6.6 million and rising. So it is conceivable, it's not inconceivable that in July we could be at or very close to the levels which would generate a profit already at the beginning of the third quarter. And of course that would probably have quite a big impact on those shares.
Then we should also look at the consistency of the performance, because throughout this year's and a few years back, I can see that there are spots where Eagle High make money, but on average we make money in 1 month and then lose money the next 2 months.
Yeah.
So investors are nervous because you don't know which result is going to get, and there's no consistency in terms of the financial performance of the company.
Well, I think we are going to be seeing more consistency. For 2015, 2016, 2017, production was consistently flat, pretty much. Although you're right, there were some peaks, there were some troughs, but it was generally quite flat, averaging around 100 to 110,000 tons a month. Last year, we saw production finally starting to rise, as it should do because we have the young age. I don't think there's anything extraordinary about this, because you saw the similar kind of pattern with other companies. Production's come down this year, but we may quite quickly get back up to those average levels. So you're going to start to see more consistently higher production. And then for the price, we've had 4 years of declining price. But if you look at the market now, which is no longer in oversupply, it's in a deficit, and maybe demand hasn't been that strong, but now with the potential for demand to start rising more strongly, and we're talking here not biodiesel but the sort of more normal food and other regular product demand, then given the shortage, that should give a consistently rising price, less volatility in the price, more certainty. Of course, there'll be a positive loop, right? Because when the prices are better, that will help us to incrementally improve the production because we'll have more money to spend. We could come back up very, very fast just because of the nature of the accounting and it's just that our production and price have been lower than average, but they can now snap back to average. And when without any more accounting, suddenly you find the profitability coming back. And that almost in a way is going to help to boost the consistency. So it should be much more consistent going forward. Okay. And of course that will, so I had this conversation with somebody when I was on the way over here, asking about, well, will they make money if they buy the shares? I think if in the past you could have said, well, there were risks, right? That the price would drop, that production could drop, that you weren't quite sure how much the depreciation would be or how much interest would be expensed in the next quarter or the one after. Those elements of uncertainty are now almost all gone. And from this level, of course you can never be 100% sure, but the chances of making money in our shares, I think, is probably the best it's ever been.
Not to mention it's more like 130-ish than
well, exactly.
150-ish.
Yes. I mean, from this level, of course you couldn't guarantee anything, but you could certainly say that the futures is telling you the price is going up. Our history of average production tells you the production is going up, and that is exactly what is happening. The production is going up. The share price is very low. So, yeah, the certainty is pretty as high as it can be, I think, at the moment to make money. Okay.
All right.
Thank you, Bwpt.
Thank you.